The House of Morgan, An American Banking Dynasty and the Rise of Modern Finance, by Ron Chernow. Picture this. It's 1907, and the entire American financial system is about to implode. Wall Street is in full panic mode. Banks are toppling like dominoes. The stock market is in free fall. And here's the kicker. There's no Federal Reserve, no government safety net to catch anyone. Even President Teddy Roosevelt is basically standing on the sidelines, helpless. So where do the most powerful men in America go? Not the White House. Instead, they're all summoned to the private library of one 70-year-old banker. This guy has piercing eyes that could probably bore holes through steel and a nose so grotesquely swollen it's hard not to stare. But here's what matters. He's the only person everyone trusts. For hours, he locks these titans of industry in his magnificent library, surrounded by priceless Renaissance paintings and ancient manuscripts. Nobody leaves until they pledge millions from their own pockets to save the system. He's barking orders, moving them from room to room like chess pieces, drafting a rescue plan on a single sheet of paper that will either save America or let it burn to the ground. That man was J. Pierpont Morgan, and that night in his library represented power so absolute it's almost impossible to wrap our heads around today. This was a private citizen acting as the nation's central bank, its president, and basically its king, all at once. So how did one family, one name, end up wielding such mind-boggling influence over the fate of nations, and what happened to that world? That's the epic tale at the heart of Ron Chernow's masterpiece, The House of Morgan. This isn't some dry textbook about banking. It's a breathtaking saga of ambition, power, and the hidden history of modern finance. Chernow is a master storyteller who transforms what could be deadly dull into drama, packed with larger-than-life characters, epic wins, and crushing defeats. There's a reason this book won the National Book Award. It reads like a thriller, except every word actually happened. Over the next hour, I'm going to walk you through the core lessons from this incredible book. Here's my promise. By the end, you won't just understand the story of one banking dynasty. You'll understand the very DNA of the financial world we inhabit today. You'll see how battles fought over 100 years ago still shape the headlines you're reading right now. This is the story of how money became modern, and how a handful of men, for better and worse, built the world we're living in. The story of the House of Morgan isn't just about one bank. It's about an empire spanning New York, London, and Paris. Ron Chernow brilliantly divides this saga into three distinct eras, each with its own character and flavor: the baronial age, the diplomatic age, and the casino age. But it all begins not with a Morgan, but with someone who couldn't have been more different: the foundation, George Peabody. Our story opens in London in the 1830s. London was the undisputed financial capital of the world. The British Empire was at its peak, and British pounds financed everything that mattered. America? It was seen as a wild, unpredictable backwater, a risky bet for European investors, and honestly, for good reason. Several American states were on the verge of defaulting on their debts. Americans had a reputation as unreliable frontier swindlers. Enter George Peabody, a tall, awkward American merchant from Massachusetts. Born dirt poor, he never forgot his struggles. The man was legendarily cheap. There's this amazing story where his partner, Junius Morgan, found him standing in the London rain, looking sick. Morgan urged him to go home and grab a cab. A little later, Morgan spots Peabody still standing in the exact same spot. "Mr. Peabody," he asked. "I thought you were going home." Peabody replied, "Well, I am, but there's only been a 2-penny bus come along as yet, and I'm waiting for a penny one." Keep in mind, Peabody was already a millionaire. But this penny-pinching man had vision. He established a merchant bank in London in 1838 with one clear purpose. It would be an American house. He wanted to build a bridge of trust between capital-rich London and resource-rich but cash-starved America. He worked tirelessly to repair America's reputation, even paying off a state's debt from his own pocket to prove not all Americans were crooks. Peabody never married, So as he aged, he needed someone to carry on his work. He chose Junius Spencer Morgan, a dignified, steady Boston merchant. In 1854, Junius became his partner. Junius was the true Morgan patriarch. He created the philosophy that would guide the family for generations. He was calm, disciplined, and believed in absolute integrity. Where Peabody was an eccentric miser, Junius embodied the respectable Victorian banker. His motto, "Do first-class business in a first-class way." This partnership between Peabody and Junius Morgan laid the foundation for everything to come. But the real story, the one that would define an era, begins with Junius's son, a young man nothing like his steady, predictable father. A young man with fire in his belly and ambition that would dwarf everyone who came before. His name was John Pierpont Morgan. The baronial age, Pierpont's empire. This launches what Chernow calls the baronial age, running from the end of the Civil War to the early 1900s, when bankers weren't just financiers, they were the lords of creation. After the Civil War, America exploded with industrial energy. Railroads stretched across the continent, steel mills rose from nothing, and new industries were born daily. But this growth was chaotic, brutal, and often corrupt. This was the era of robber barons, men like Jay Gould and Jim Fisk, who treated corporations like personal toys, bribing legislators, manipulating stocks, and literally hiring thugs to fight their battles. Into this wild west of capitalism stepped Pierpont Morgan. The man was a force of nature, big, burly, with a barrel chest and piercing, fiery eyes. His most distinctive feature was his nose, horribly deformed by a skin disease called acne rosacea. It was swollen, purple, and lumpy. He was intensely self-conscious about it, and his gruff, intimidating manner was partly armor to keep people from staring. When he fixed those eyes on you, witnesses said you felt like a bug under a microscope. Morgan looked at the chaos of American industry, and it offended him to his core. He believed, almost religiously, that competition was wasteful and destructive. His life's mission became bringing order to chaos. He didn't just want to finance companies. He wanted to control them, to force them into stable, profitable arrangements. He accomplished this through what became known as Morganization. When two railroads were destroying each other in a rate war, both careening toward bankruptcy, Morgan would step in. He'd summon the railroad presidents to his library at 219 Madison Avenue, a dark, imposing room filled with rare books and priceless art. He famously locked them inside until they agreed to stop competing. He'd reorganize their finances, slash their debt, and most importantly, place his own men on their boards of directors. In exchange for his capital, he demanded control. A company financed by Morgan became a Morgan Road, or a Morgan Company. He was their banker, their priest, and their king. His word was law. This crusade for order peaked in 1901 with his most audacious creation, United States Steel. Andrew Carnegie, the brilliant and ruthless steel titan, was threatening to launch a price war that would devastate the entire industry. To stop him, Morgan decided to simply buy him out. After quiet negotiations, Morgan agreed to pay Carnegie nearly $500 million, an almost unimaginable sum then, making Carnegie the richest man in the world. Morgan then combined Carnegie Steel with his other holdings to create U.S. Steel, the world's first billion-dollar corporation. It controlled over 60% of America's steel production. Pierpont Morgan wasn't just creating a company, he was creating a system. He was replacing competitive chaos with monopolistic stability. To his admirers, he was a visionary building a modern, efficient America. To his critics, he was a tyrant, the head of a money trust strangling competition and concentrating all economic power in a few Wall Street hands. The absolute peak of Morgan's power came during the Panic of 1907. As we saw at the start, with the financial system in freefall, Morgan became America's de facto central bank. He summoned the presidents of major banks to his library and told them they had to create a pool of money to support weaker institutions. When they hesitated, he locked the doors. "There is the place to sign," he reportedly said, pointing to a document, "and here is the pen." They signed. For 2 weeks, he worked almost non-stop, directing capital, saving banks, rescuing the New York Stock Exchange from collapse, and even bailing out New York City. For one brief, terrifying moment, he was the absolute master of American finance. But this incredible display of private power also marked its end. The country was stunned and frightened that one man could wield such influence. The Panic of 1907 led directly to the creation of the Federal Reserve System in 1913. The government was finally stepping in to do the job Pierpont Morgan had been forced to do alone. Pierpont Morgan died in 1913, just as the Federal Reserve was being born. He was a titan, a figure of almost mythical proportions. A man of profound contradictions, a devout Episcopalian who was also a notorious womanizer, a patron of the arts who collected priceless treasures while crushing competitors. He embodied the raw, untamed energy of the Gilded Age. With his death, the baronial age of the all-powerful individual banker closed. The empire now passed to his son, J.P. Morgan, Jr., known to everyone as Jack. The diplomatic age, Jack Morgan's world. This ushers in Chernow's second era, the diplomatic age, running roughly from World War I to the end of World War II. If Pierpont was a king, Jack was a constitutional monarch. The power remained immense, but quieter, more refined, and exercised in close partnership with governments. Jack Morgan was his father's complete opposite. Where Pierpont was explosive and domineering, Jack was shy, gentle, and deeply Anglophile. He loved England, spent much time there, and saw himself as an English country gentleman who happened to work on Wall Street. He lived in his father's massive shadow and struggled with insecurity. He once said, "If I have been able to succeed, I attribute it more than anything to the endorsement of my father's friends." But the world had changed, and banking power had changed with it. World War I was the event that transformed the House of Morgan from a dominant American bank into a global power of the first rank. When war broke out in 1914, America was officially neutral, but the Morgan partners' sympathies lay entirely with Britain and France. For them, this was a battle to save civilization. The Allies desperately needed to buy supplies in America: food, ammunition, raw materials, but they were running out of money. The Morgan Bank stepped into the breach. In one of the most astonishing arrangements in financial history, the British government appointed J.P. Morgan and Company as its exclusive purchasing agent in the United States. The bank essentially became the supply department for the Allied war effort. From its offices at 23 Wall Street, the famous corner, the bank organized a massive logistical operation. It financed and coordinated the purchase of over $3 billion worth of goods for the Allies. That's equivalent to over $70 billion today. The bank negotiated contracts for everything from wheat to locomotives to horses. It was acting as a shadow government, wielding economic power on a scale that dwarfed its pre-war activities. This role made the bank a fortune. It earned a 1% commission on all purchases, but it also made it a target. To German Americans and isolationists, the House of Morgan was a cabal of merchants of death, dragging America into a European war to protect its loans. In July 1915, a German sympathizer walked into Jack Morgan's Long Island estate and shot him twice in the groin. Jack survived, but the attack only hardened his resolve to support the Allies. When America finally entered the war in 1917, the Morgan Bank became the primary channel for government financing. The diplomatic age was in full swing. The Morgan partners, especially the brilliant and charming Thomas Lamont, became unofficial ambassadors. They sat at the peace conference at Versailles, advised presidents and prime ministers, and negotiated massive reconstruction loans for Europe. They saw themselves as financial statesmen, working to restore order and stability to a shattered world. Lamont, particularly, believed deeply in Woodrow Wilson's vision of a League of Nations. He thought international cooperation, guided by enlightened bankers, could prevent future wars. This idealism, however, had a darker side. As the bank became entangled with foreign governments, it sometimes became their apologist. In the 1920s, Lamont became a prominent supporter of Benito Mussolini's fascist regime in Italy. He saw Mussolini as a strong leader who'd saved Italy from communism and made the trains run on time. He helped arrange a massive loan for the regime and even advised Mussolini on improving his American public relations. It was classic relationship banking, where loyalty to a client blurred political and moral judgment. The Roaring Twenties were golden times for the House of Morgan. It was the world's most prestigious bank, the gatekeeper to American capital. But the speculative fever gripping the country worried the conservative Morgan partners deeply. Then came the crash of 1929. Just as his father had in 1907, Wall Street's bankers gathered at 23 Wall Street on Black Thursday. This time, Thomas Lamont led the meeting. They organized a pool of money to support the market, but it was like trying to stop a tidal wave with a bucket. The market's power had grown far beyond any small group's control. The era of the private rescue was over. The Great Depression that followed brought public fury down on Wall Street. The bankers who'd been heroes in the 20s were now villains. This anger culminated in sensational Senate hearings in 1933, led by fiery prosecutor Ferdinand Pecora. The Pecora hearings put the House of Morgan on trial. Jack Morgan, now a weary, white-haired 66, was called to Washington to testify. He was grilled about the bank's secret operations, its preferred lists of influential friends, offered stock at bargain prices, and its immense power. The hearings' most famous moment had nothing to do with finance. As Jack sat at the witness table, a press agent for Ringling Brothers Circus, in a publicity stunt, suddenly placed a female midget named Leah Graff on his lap. Flashbulbs popped, and the next day, the image of the world's most powerful banker with a circus performer on his knee was splashed across every newspaper in America. The photo humanized Jack, but it also symbolized the end of the bank's imperial dignity. The mystique was shattered. The hearings led directly to the most sweeping banking reform in American history, the Glass-Steagall Act of 1933. The law built a high wall between two types of banking. Commercial banking, taking deposits and making loans, was separated from investment banking, underwriting stocks and bonds. The theory was that investment banking's speculative risks should never again threaten ordinary depositors' savings. For the House of Morgan, which had always done both, this was a death sentence. The firm was forced to choose. It had 1 year to decide which business to keep. It was the end of an era. The great, unified House of Morgan would be broken in two. After much soul-searching, the partners made their choice. They'd remain a commercial bank, J.P. Morgan & Company, and spin off their investment banking business into a new firm. On September 16, 1935, a new name appeared on Wall Street, Morgan Stanley. It was staffed by Jack Morgan's younger son, Harry, and some of the brightest partners from the old firm. The diplomatic age was over, and the great empire had been cracked in two. The casino age, modern Wall Street. This brings us to Chernow's final era, the casino age, spanning from World War II's end to the late 1980s. This is the world of modern Wall Street, a world that would have been unrecognizable to Pierpont Morgan. In this new age, the balance of power shifted dramatically. Bankers were no longer masters. Their clients, giant multinational corporations like GM and Exxon, were now far larger and more powerful than the banks themselves. These companies no longer needed a single, powerful banker to vouch for them. They could raise money anywhere in the world from a growing number of competitors. The old gentleman banker's code of exclusive relationships and polite non-competitive behavior began crumbling. Banks had to hustle for business. J.P. Morgan & Company, which merged with Guarantee Trust in 1959 to become Morgan Guarantee, remained a prestigious commercial bank, the home of old money and corporate aristocracy. But it was a smaller, quieter player in a much larger game. Morgan Stanley, on the other hand, inherited the mantle of premier investment bank. For decades, it was the white shoe firm, the most elite underwriter on Wall Street, still clinging to old traditions of serving blue-chip clients with quiet dignity. But the world was changing too fast. The 70s and 80s brought a new, aggressive style of finance. This was the age of hostile takeovers, leveraged buyouts, and junk bonds. Wall Street's old, clubby world was being replaced by a ruthless, anonymous global marketplace, a giant casino. The old Morgan houses had to adapt or die. Morgan Grenfell in London, which had become a sleepy, aristocratic firm, transformed itself into the city's most aggressive takeover specialist. It became the gentleman pirate, using its prestige to push boundaries of acceptable behavior, a path leading directly to the infamous Guinness scandal in the 80s. Morgan Stanley experienced an even more dramatic transformation. Led by a new generation of partners who saw the old ways were no longer profitable, the firm made a historic decision in 1974. For the first time, it represented a client in a hostile takeover. It was a shocking break with tradition. The firm that once symbolized stability was now an agent of disruption. This move opened the floodgates. The Mergers and Acquisitions Department, led by brilliant and aggressive banker Bob Greenhill, became the firm's new profit engine. Morgan Stanley mastered the takeover game, advising on some of the biggest and most brutal corporate battles of the era. It also plunged into the risky world of junk bonds and leveraged buyouts, financing the very deals that were dismantling the stable corporate America its founders had helped build. By the 80s, the three Morgan houses, once part of a unified empire, were now fierce competitors. The family feeling was gone, replaced by rivalry. They were all playing the same game in the global casino, and the old Morgan name was now just one brand among many. The story culminates in the late 80s. Morgan Grenfell, wounded by scandal, is sold to Deutsche Bank, ending its independence after 150 years. Morgan Guaranty, realizing traditional lending is dying, aggressively moves into investment banking, setting itself on a collision course with its old sibling. And Morgan Stanley, having fully embraced the new age, becomes one of the most powerful, profitable, and feared firms on Wall Street. The House of Morgan as a single, all-powerful entity no longer exists. Chernow's thesis is clear: it never will again. The world has become too complex, capital too widespread, and power too dispersed for any one bank or one family to dominate finance the way the Morgans once did. The story powerfully reminds us that in the world of money, nothing is permanent. The old order is always giving way to the new, and traditions that seem sacred in one generation are often shattered by the next. Listening to this story stretching over 150 years, it's easy to get lost in the epic scale, the wars, the panics, the billions of dollars. But I think the real power of Ron Chernow's book lies in the human drama and the timeless lessons it holds about power, character, and the world of money. What fascinates me most is how the book traces the evolution of power itself. In the baronial age, power was personal. It resided in one man, J. Pierpont Morgan. His character, his integrity, or at least the perception of it, was the bedrock of the financial system. When he gave his word, it was better than any contract. That's an incredible concept. A man's personal reputation was the currency of the realm. Then, in the diplomatic age, power became institutional. It wasn't just about one man anymore. It was about the House of Morgan itself. The name carried the weight. Partners like Tom Lamont were brilliant, but they were acting as representatives of the firm, and by extension their governments. Power became more about access, connections, and influence within established structures. Finally, in the casino age, power became impersonal. It shifted to the markets. It didn't matter who you were or what your name was. What mattered was your access to capital, your speed, your trading prowess, and your willingness to take risks. The individual and the institution were both dwarfed by the massive, anonymous force of the global marketplace. This progression tells us something profound about the world we live in. We often look for a single person or small group to blame when the economy goes wrong, just as people blamed the money trust a century ago. But Chernow shows us the real power often lies in the systems themselves, the rules of the game, the flow of capital, and the technological forces constantly reshaping our world. So what can you, as a young person, just starting to think about your future, take away from this grand historical saga? First, understand that history isn't just old stories, it's a map of the present. The battles over debt, trade, and government's role fought in Pierpont Morgan's day are still being fought today, just in different forms. Understanding these patterns gives you a powerful lens to view the world. It protects you from the illusion that what's happening right now is entirely new. Second, consider the idea of character as capital. Pierpont Morgan's most famous quote from the Pujo hearings came when he was asked if credit was based on money or property. He replied, "No, sir, the first thing is character. A man I do not trust could not get money from me on all the bonds in Christendom." In an age that often seems to reward flashiness and quick profits, it's a powerful reminder that trust and reputation, built slowly over time, are the most valuable assets you can ever possess. They're the foundation of real, lasting success. Even as the Morgan Bank's methods became controversial, its reputation for integrity was the one thing rivals could never replicate. Finally, think about the difference between creating value and simply shuffling assets. The early House of Morgan financed the railroads, steel mills, and electrical grids that built modern America. They were creating something new. In the later casino age, much of finance became about takeovers and leveraged buyouts, shuffling ownership of existing assets, often loading them with debt, and extracting fees in the process. Ask yourself, in your own career and in the businesses you admire, are you building something or just playing the game? Are you creating long-term value or just chasing short-term profits? The House of Morgan is a monumental work, and what we've talked about today is just a glimpse into its riches. We've hit the highlights, but I'll be honest, a summary can only ever be a signpost, pointing you toward a destination. The real journey happens when you walk the path yourself. The true power of this book is in the details, the incredible stories, and Chernow's masterful prose. It's in those quiet moments of reading when you feel like you're in the room with these financial giants watching history unfold. This summary is designed to help you decide if this book deserves a place on your shelf. If anything we've explored today has sparked your curiosity about the secret world of money and power, I urge you to grab a copy. Reading it isn't just an education. It's an experience that will fundamentally change how you see the economic world around you. You can find a link to the book in the description below. Also, if you found this summary valuable, please take a moment to hit that subscribe button. It tells us these deep dives into big ideas are what you want more of, and it ensures you won't miss our next journey into another life-changing book from the billionaire's bookshelf. Let's keep learning and growing together.